I'll just show a few screens. Kindly confirm you can see my presentation.
Yes.
Okay, that's fine. Yes. All right. Okay, so we've said a whole lot, and then we don't have much time. Just to mention certain things here that these AI/ML models we talk about add genuine value across the credit value chain. Some of the features that it brings on the board or to the board, it brings an holistic approach to credit lending. It brings speed. I think one of the speakers talked about analyzing vast amount of data, in seconds. It brings accelerated loan approvals and customer experience. Very key, customer experience. And of course, I must not fail to mention anomalies detection. So looking at this, I will show just a few screens. For this is Credit Risk 360. There's a dynamic product rack, risk acceptance criteria, that helps us to deal with application and behavioral assessments of individuals, of customers, and rating. So this rack can cut across different products. This is where such rack is developed with the intention of helping to pre-qualify customers on the credit platform. Now, this same platform allows analysis of wide range of data across various extracts of credit data from agencies and credit bureaus. So looking at this solution, then on the digital side, you could have somebody coming to make a credit application on the platform, and the next thing the system would quickly do is something like this. I just put a dummy email address and then a dummy password. 2, 4, 5, 6. 1, 2, 3, 4, 5, 6. So having a system like this, once the conditions, the T and C's are accepted, you click on process, the system is able to quickly, in seconds, check all of these credit bureaus and credit scores, as we had earlier mentioned, tracking the core credit bureaus like CRC, First Central Credit Registry, that's the CRS, and then also the CBN CRMS credit agency, that's the CBN CRMS, and then other key parameters that may have been defined on the solution, like tracking existence of dot checks, checking customer negative list, and other basic validations. So this is just a quick example of how in 1 or 2 seconds, the system is able to run through these agencies and bureaus to help processing. Now, if we would then check on some other things like, let me log in as just take a demo user. Okay. The system is able to give you real-time credit risk monitoring, in the sense that on the platform, you're able to get early warning signals. You're able to see an interactive dashboard whereby even documents, I think Kennedy mentioned document tracking and monitoring, is able to track your documents and monitor the authenticity of these documents. Is able to check other information depending on the nature of the customer, as in the entity. If it's not an individual, maybe an SME or an emerging business, you may want to supply 1 or 2 documents to track bank statements. And I think it was Kennedy, or maybe someone mentioned being able to look at bank statements for customers who don't even have credit history. It may be able to look at a pattern of withdrawals and deposits and be able to determine certain outcomes based on the request that the customer is asking for. So documents tracking and several other monitoring tools are embedded, inclusive of the environmental and social governance tracking and rating, scoring. The platform is able to ensure that that happens, looking at environmental and social governance checklists and scoring, looking at green loan checklists and scoring, and also reporting, auto assignments of recoveries to agencies, external vendors. It's able to take care of all of this, look at turnovers, cash flows, and statements. Now, these models use patterns and algorithms for decisioning. Let me show us maybe one of the last screens because of time. Use patterns and algorithms for these decisionings. Okay, I'm going as a customer, and then I can get to see my eligibility on the go as I'm making a loan request. The system is able to give me the recommendation, give me the amount, the score, the rating, and then also give me other information that I need to know, either as a customer or as a banker or a financial institution, a credit provider. So I get other information. I'm able to get signals, risk assessment signals, red warning signals, yellow warning signals, qualitative warning signals. I'm able to also get the bank account details with turnovers and all of those critical information belonging cut across bank statements with multiple banks. I'm also able to get the credit line condition with maximum recommended amounts. Now, where this customer or obligor who is requesting for a credit is not eligible, the system is also able to give you the historical defaults where there are warning signals. Maybe all of these signals that it gives is able to give you historical defaults. And so what it does essentially is to look at, it doesn't just use rules. It's actually, just like my GMD said, it's actually over time use patterns to add to whatsoever predictive scoring and analysis it's suggesting, and also pre-approve and qualify these customers for credit. And it does auto approvals after this. Once this condition is okay and is set for is approved and the rating is okay, the customer is eligible, the system does auto approval and auto disbursement. And then you can get auto offer letter generation. So when you are done with the approval, automatically the offer letter is generated. Depending on the complexities that is involved in the offer letter, it automatically generates these letters and ensures that the letter is emailed to the customer automatically with e-signatures signed there, and then you are able to the customer is able to execute these letters, and then you are able to continue with disbursements. So these are some of the processes that happen in the background, as in the system is able to automatically get these things done. This is a sample auto-generated offer letter that uses all the information that the system is able to acquire for that customer, and then based on, maybe depending on the nature of the loan, you could have done some underwriting, is able to also automatically get this information from industry risk and certain other information that may be required to classify this request, and then know exactly what next to do. So it also supports an open architecture for integration with ERPs. So making it deployment ready with the models that are there here. So you are able to integrate with other credit solutions and then get the system up. Now, this solution, these requirements, just like Omar said, can be tailored to enterprise need, using the design factors and understanding within the enterprise focus areas. So these are some of the things that we do the Fintrak Credit Risk 360.
Subscribe to our YouTube channel.